Right guys, welcome back to another YouTube video here on the Luke Trades channel. Today we're going to be understanding time frame alignment. This is one of the main concepts that I've used in 3 years of my trading journey, and it really helped me to make sure that all my lower time frame trades were in line with the higher time frame and the intermediate time frame. So we'll head over to the chart now and I'll share some examples with you. Alright, so the main thing about understanding time frame alignment is that it's all fractal. So there's certain key levels, so internal and external, which I've made a video about on my page before. But there's certain key levels that you think will be respected, and then you use the lower time frame in that case to show if it will be respected. So in this example, so we're going external all the way down to internal, which is down here. And you would imagine that we're gonna, because basically the market only does two things. It's only sweeping old high, lows and highs, and it's also rebalancing imbalances. So because we're going external to internal on the daily time frame, then we want to go down to the lower time frame or the intermediate time frame in this case to see how we're respecting that level. And here I'm looking for a couple of things, okay? First thing I'm looking for is, are we respecting bearish PD arrays? So have we seen that old highs are being respected and getting swept instead of closing above in this scenario? So you can see here we're sweeping it and then closing back inside the range. Are old lows being disrespected? Because obviously we're bearish, we want to see price go lower. So we can see that we're clearly disrespecting it here. Are bullish PD arrays or bearish PD arrays being respected or disrespected? It's pretty simple, right? So you can view here, we've got a SIBI, a bearish fair value gap, being respected. You can see here, if we go along here, sorry, you can see we've got these BISSIes here, and they're being disrespected. They've been inversed. There is no support being found in these locations. So understanding that, we can see how we can blend the higher time frame with the intermediate time frame. But I bet you're probably wondering, how do you blend the intermediate time frame with the lower time frame? So here we can use this internal range liquidity here, for example. So we're using the same POIs as we do on the higher time frame, we're just now using it on the intermediate time frame. So you can see here we come into this internal range liquidity, and to see if we're respecting it, we'll look for our entry trigger, which in my case is either an order block or an inverse fair value gap. So you can see here we're running this high into this 1 hour internal, right? And then we have an order block here which gets respected. It really can be that simple if you let it. You just have to see clear structure change in order to make your bias. Okay, so we've got the understanding of where the higher time frame is drawing to, hopefully. Now we just need the intermediate time frame to be the roadmap till we get there. Does that make sense? Right, so here we've got another example. Here on the weekly time frame, the higher time frame, we're sweeping weekly external, okay? But the difference about this is that there's actually no internal to target, okay? So you don't always need an internal to external move. You just need to look where price is currently located. So on this day here, I would have been looking that price is currently located at a weekly external, right? So when we go down to the aligned time frame, and what are we looking for? We're looking for bullish PD arrays in this example to be respected and bearish to be disrespected, okay? So right now, we want to see lows getting rejected and old highs getting broken through, okay? So as you can see here, we've got this bullish PD array here, bullish fair value gap, it's been respected, right? And then you can see that we're breaking through these highs. None of these highs are stopping us then. We're not sweeping any liquidity, we're not doing anything like that. We're rejecting through the highs and breaking through them with pressure. So here you even have this massive SIBI that gets inversed, okay? It just tells you that there's a high amount of buying pressure at the moment. So say from this fair value gap here, right, we will go down to the 15-minute. So the 4 hour is aligned with the 15-minute, which is here. And here you'll be able to see, so this is our 4 hour gap, our 4 hour BISSI. And as soon as we come into it, you see how the structure changes again. We start to respect this level. we start to sweep old lows and break through old highs. You see how we're breaking through this? We've got no issue breaking through this high here. But you see how we're respecting the old lows? Because it's look at the candle closures. We're closing back inside the range. Look at this candle here. Look at this. We're literally closing back all the way inside the range. These wicks tell us that there's heavy buying pressure. So if I was to look to take a trade on this, you could look to get in here off this order block, or you could even look to getting up higher. There's always there is a retrace here into a fair value gap. This one here. So you can always ride the move higher. But yeah, it's once you see it all, it changes your perspective on it all. So this is example number 2. This was going from the weekly to the 4-hour to the 15-minute. The example I showed before was going from the daily to the 1-hour to the 5-minute. So hopefully this helps. If you need So when I say internal to external, I've got a video on my page about it. It's internal is referring to fair value gaps. External is referring to old highs and old lows, swing lows. Okay. So when we sweep it, so liquidity sweep, as most of you may know it. So, for example, here, I'll just talk you through it. On the monthly, if we come into an internal, all right, say we're bullish and we're going internal to external, on the daily, I'd want to see a daily market making buy model. So I'd want to see the bullish PD raise being respected, and I want to see bearish PD raise being disrespected. And then obviously you can fractalize that down from the daily and go to the align time frame, which is the 1 hour for your entry. Same way I just did with the hourly to the M5 on that time frame in the example. So in another example, okay, you can go from the weekly, say you sweep in an old low on external on the weekly time frame. On that hour 4, you look for a market making buy model again, and you're looking for bullish PD rates to be respected. So let's say we've obviously just done the daily to 1 hour. So let's say for the hour 4, okay, you see that we're sweeping an old high, an external point of interest on the hour 4, and you want a bearish bias, right? So then we drop down to our intermediate time frame, which in this case is the M15. So then we can see the M15 bearish PD rays are being respected and bullish PD rays are being disrespected. So then from there we can fractalize it down and we go from the M15 to the M1. And then the M1 will be our entry. Does that make sense to everyone? So they're all correlated, and by understanding where you are on the higher time frame and not just sticking on the lower time frame, then you're less likely to get chopped up and you're going to be trading in high probability conditions. I teach all these concepts in my paid Discord. The link is in the bio if you're interested at all in getting mentored by me. Yeah, there's a lot more in-depth videos on this and all the concepts I use to trade every day. So yeah, take it easy, guys, and thanks for watching.